Welcome to India Business Insights. While the world is talking about the very lavish pre wedding celebrations of the younger scion of the Ambani family, Anant Ambani, these celebrations have been the stuff of fantasies. With world class entertainers such as Rihanna, lavish banquets with chefs flowing from all over the world. Guest list includes current and former prime ministers, world's richest such as Bill Gates and Mark Zuckerberg and others. While this is just the pre wedding celebrations, the wedding promises to be an even bigger and extravagant affair. In this backdrop, let us look at how Reliance is evolving. Today, we are going to talk a bit deeper about how Reliance has evolved from being a commodity player, a petroleum and petrochemical player, into a consumer facing retail company and also a company at the forefront of digital revolution in India. It is also developing a large language model to be in the forefront of artificial intelligence AI. In our earlier videos, we have seen how Reliance Industries Limited was set up by Dhirubhai Ambani as a small venture firm trading commodities, especially spices and polyester yarn in 1965. Later, it expanded its business into energy, petrochemicals, natural gas, retail, telecommunications, mass media, and textiles. Reliance is the largest public company in India by market capitalization and revenue. It is India's largest private taxpayer and largest exporter, accounting for 7% of India's total merchandise exports. We have covered the early history of Reliance in fair amount of details in our video and introduction to Reliance Industries Limited. The link to this as well as all the other videos on this company are in the description box. In 2006, a new chapter unfolded as Reliance stepped into the retail business. Within 8 years, it soared to become the largest retailer by revenue. 2016 witnessed the launch of Jio, the largest greenfield digital development project globally. In less than a year, Jio propelled India to the number one position in data consumption, reshaping the digital landscape. It is these two businesses which are at the forefront of the new Reliance Industries Limited. We notice that while oil to chemicals business is still the largest business, retail and digital businesses are the fastest growing businesses. The digital business is also extremely profitable. Now let's discuss about Reliance Retail. Reliance Retail is a subsidiary of Reliance Industries. Founded in 2006, it is the largest retailer in India in terms of revenue. Its retail outlets offer foods, groceries, apparels, footwear, toys, home improvement products, electronic goods, and farm implements and imports. Apart from physical stores, the company also sells products on its e-commerce website. And as of August 2023, the retail segment is valued at $100 billion. There are 45 subsidiaries and divisions of Reliance Retail, of which some major ones are Reliance Fresh, Reliance Digital, Jio Stores, Reliance Trends, Reliance Footprint, and its e-commerce fashion shopping website Ajio, which was founded in 2016. Reliance also ventured into e-commerce beauty retail with Tira, which was launched on April 5th last year. With Tira's launch, Reliance will be taking on Nykaa, Tata Click, Myntra and other players in the market for beauty products. In 2022, Reliance Retail Ventures Limited RRVL bought a controlling stake in makeup and personal care brand Insights Cosmetics. Now let's discuss about how Reliance enhanced its market share by several partnerships and mergers. On 7th October 2021, the company announced its partnership with 7-Eleven to open its stores in India. The announcement came a day after Future Group announced the end of its partnership with 7-Eleven, citing the inability to meet the target of opening stores and payment franchise fees. The first 7-Eleven in India opened in Mumbai. In 2022, soft drink brand Campa Cola was acquired by Reliance Industries for Rs 22 crore in March 2023. Reliance Consumer Products RCPL, the fast-moving consumer goods arm and subsidiary of Reliance Retail Ventures RRVL, announced the relaunch of Campa Cola in 3 variants, Cola, Orange and Lemon at select stores. Some other major acquisitions include Hamleys, Netmates, Urban Ladder, Zivame and Amante. In 2021, Reliance Retail also acquired a 66% stake in local search company Just Dial for Rs 5,710 crores. Although Reliance Retail's grocery business primarily markets products of third-party FMCG players, they also sell in-house brands including Best Farms, Good Life, Enzo, Mops, Expels and Home One. Reliance has also acquired Sephora India's franchise business and signed exclusive distribution agreement with SMCP for Sandro for Marge brands. Reliance retail business expanded its store network with over 3,300 new stores added during the financial year, taking the store tally to 18,040 stores pan-India. Reliance Retail experienced a 50% increase in footfall, reaching a total of 780 million. The registered customer base also expanded to 249 million. While retail business has been built on large acquisitions, the other big business that Reliance has built is in the digital sector. Jio is the fastest growing digital company globally. Jio is an Indian telecommunications company and a subsidiary of Jio Platforms headquartered in Navi Mumbai. It operates a national LTE network with a coverage across all 22 telecom circles. Jio offers 4G and 4G Plus services all over India and 5G service in many cities. Its 6G service is in the works. Jio was launched on 5th of September 2016. It entered with a price sensitive strategy offering free mobile and internet services to people all over India and became the biggest competitor for other telecom companies like Airtel, Vodafone, and Idea. Now, it is the largest mobile network operator in India and third largest mobile network operator in the world. Jio has since then launched several products and services which include number 1 Jio Fiber, number 2 Jio Business. The company has launched connectivity solutions for businesses bundled with services provided by Jio Platforms, Reliance Retail and Office 365. Number 3 Jio Air Fiber. Number 4, on 27th of October 2023, Jio launched its satellite-based GigaFiber internet services in India. Some of the Jio products include LYF smartphones, Jio Phone, Jio Bharat, a budget-friendly 4G phone at affordable price of Rs 999. Other products include JioFi, JioDive, virtual reality headset in India, JioTag among others. In September 2016, the Telecom Regulatory Authority of India (TRAI) summoned Jio and the country's existing telecom operators like Airtel, Vodafone, and Idea Cellular to meet and discuss an issue regarding the interconnection between the operators. This was a result after Jio complained to TRAI and Department of Telecom (DOT) recommended fines of Rs 1.050 crore each on Vodafone and Airtel for violating license conditions over quality of service by not granting adequate poles to Jio in 21 circles each. Poles are required for voice calls to go through from one network to another, in this case, from Jio's network to those of Bharti Airtel, Idea, and Vodafone. The company further added that the operators are trying to sabotage its entry into telecom scene. However, DOT dismissed the request and directed TRAI to help settle the dispute amicably. Moreover, the Cellular Operators Association of India (COAI) requested TRAI to include all the operators in the discussion instead of the three. Talking about its revenue, the digital service revenue for FY 2022-23 stood at 1,19,791 crore and revenue from operations stand at 1,01,961 crore. Comparing Jio with other competitors, during last year, Reliance Jio has emerged as the biggest winner. Its subscriber base has increased to 442.49 million subscribers, followed by Airtel with 375.25 million subscribers. VI is a distant third with 228.33 million subscribers, while state-owned BSNL also reported a decline of 1.41 million subscribers. As VI is the only telco yet to roll out 5G services, the telco is expected to further lose subscribers in the coming months as users port out to Jio and Airtel to experience faster speeds. The Telecom Regulatory Authority of India (TRAI) data showed Jio and Airtel have widened their customer market share to 38.6% and 32.7% respectively, while VI's have narrowed to 20%. Jio Financial Services was listed on the stock exchange on August 21 last year. While the new businesses described earlier are likely to become increasingly important and are also more outward looking businesses, the oil to chemical business still remains the largest and most profitable business in the Reliance stable. This provides the capital for the growth of the other businesses. Even this business continues to have a lot of headroom for growth, not only in its traditional products but also in several new materials that the company is launching. As we know, the base of Reliance Industries Limited, on which it stands, is its O2C business, as also most of the current revenue comes from here. It faces its competition with companies like Oil and Natural Gas Corporation, ONGC, Indian Oil Corporation Limited, IOCL, Bharat Petroleum Corporation Limited, BPCL. But what sets Reliance O2C apart is that it constantly reinvents its profits in making the process better, whereas the government, being a majority holder of the companies like ONGC, BPCL, and IOCL, takes out a hefty profit in its account as dividend every year. So, this has created a wide gap between the Reliance O2C and its competitors. Reliance O2C kind of has a partial monopoly in its offerings it provides. Reliance operates one of the world's largest and most complex refining complexes located at Jamnagar in India. The refinery has the capabilities to process a diverse range of crude oils. The O2C business includes the production of petrochemicals, which involves converting refined products into a wide array of chemical products, which include ethylene, propylene, benzene, and other petrochemical building blocks. The product portfolio of the O2C business includes a range of refined petroleum products like gasoline, diesel, jet fuel, and petrochemical products used in various industries. The company has a global footprint with its products being exported to markets worldwide. The company plays a crucial role in meeting India's energy and petrochemical needs and contributes to the country's economic growth. In the recent 2 years, the company also made substantial supernormal profits on account of its unique ability to process the heavier Russian crude which was offered to India on discount. Reliance Industries Limited's RIL oil to chemical business O2C aims transition to a sustainable green circular and consumer integrated chemicals and materials business and to become net carbon zero by 2035. The first stage of this strategy is to switch to 100% green energy for captive consumption to net zero, which will reduce the energy costs and make these assets cost competitive. The second stage is to upgrade the refinery products into downstream value added chemicals for which RIL has developed in house technology. As of 29th December 2023, Reliance Industries Limited RIL has become the first Indian company to chemically recycle plastic waste based pyrolysis oil into International Sustainability and Carbon Certification ISCC Plus certified circular polymers. This new innovation is a testimony to RIL's commitment in reducing plastic waste and supporting circular economy in India. Talking about profits, O2C business revenue stood at 5,94,650 crore in FY 2022-23 compared to revenue 5,899 crore in FY 2021-22. Now let's look at Reliance Oil to Gas business. Reliance Industries oil to gas business involves exploration and production activities related to natural gas. The Krishna Godavari Dhirubhai 6 KG-D6 block located in the Bay of Bengal off the eastern coast of India has a sufficient area of focus for Reliance in its oil to gas business. The company has undertaken exploration and production activities in this offshore block. The MG field started producing in the first quarter of the fiscal year 2023-24. The gas from the KG-D6 field will be sufficient part of India's domestic gas production. At its highest capacity of around 30 million metric standard cubic meters per day, MMSCMD, it's expected to contribute to about 30% of India's domestic gas production. Reliance's natural gas production contributes to meeting domestic demand for clean energy. Additionally, the company exports natural gas to international markets depending on contractual agreements and market conditions. While the O2C oil to chemicals business is a major component of Reliance's portfolio, the oil to gas segment adds diversity to the company's energy operations. Revenue for oil and gas E&P stands at 16,508 crore in FY 2022-23 compared to 7,492 crore in FY 2021-22. Gas is expected to play a key role as a transition fuel, and share of gas in energy mix is expected to increase from 6% to 15% by FY 2030. Reliance's current portfolio mix is ideally placed for helping meet this increased demand. At their peak, Reliance is currently producing deep water fields are expected to produce nearly 30% of India's domestic production. Next is Reliance Media Business. Network 18 Media and Investments, Network 18, a subsidiary of Reliance Industries Limited, is one of India's most prominent media and entertainment conglomerates. With a 3,600 presence across content genres including news, entertainment, sports, movie production, and live entertainment, it is a one-stop destination for audiences seeking diverse content. Network 18 owns and operates a diverse range of television channels covering news, business, entertainment, and regional content. Some notable channels include CNBC TV 18, CNN News 18, Colors, and MTV. The company also has a significant digital media presence through platforms like news18.com, Money Control, First Post, and Voot. These platforms offer news, financial information, and entertainment content online. Network 18 has been involved in the production and distribution of films. It may also have interest in events and entertainment properties. In the past, Network 18 had a presence in print media with publications like Forbes India. Network 18 have made strategic investments or acquisitions to strengthen its position in the media and entertainment industry. Acquiring content production houses, digital platforms, or regional broadcasters are common strategies in this sector. Jio Studios, the media and content arm of RIL, is a leading content studio that produces movies and web originals in Hindi and all other major Indian languages. Achieving market leadership within 5 years of its inception, Jio Studios has demonstrated scale, commercial success, as well as garnered critical acclaim with 16 films and 8 web series sweeping over 100 awards in India and internationally. As the media and entertainment sector is expected to grow at a CAGR of 10.5% to reach $2.83 trillion by 2025, Jio Studios aspire to lead from the front as a game changer in the content creation value chain with respect to scalability, technology, and creative excellence to put Indian stories on the global map. As we are preparing this video, Reliance and Disney Hotstar are merging their businesses, where Reliance is a senior partner and Mrs. Neeta Ambani has been appointed the chairperson. The merged entity, with a likely revenue of Rs 25,000 crore, is likely to be a dominant force in linear TV and OTT platforms with a 40% share in the Indian market. Reliance is transitioning into clean energy. The Reliance Group has several acquisitions to help reach its goal to net carbon zero by 2035, which includes number 1, Starling and Wilson Renewable Energy Limited, with the group farms holding over 40% stake in the company. Number 2, Reliance has acquired REC Solar Holdings for an enterprise value of $771 million. REC Group is one of the world's leading solar cells and panels and polysilicon manufacturing companies. Number 3, it has also partnered with NextWave for joint technology development and commercialization of high-efficiency monocrystalline green solar wafers. Reliance has access to NextWave's proprietary technology, which is expected to drastically lower costs and make solar photovoltaics the lowest cost form of renewable energy available. This will help Reliance build large-scale wafer manufacturing facilities in India. So, while it keeps and continues to grow its traditional commodity businesses, it has created large, exciting outward-looking businesses, built powerful brands in these businesses, and is likely to dominate the economic landscape of the country. We need to see how will the management structure of the company evolve. How will the business be shared amongst the 3 children of Mukesh Ambani? Will the company be split as a part of the success plan, or will it continue to operate as a single entity? Thank you for joining us on this adventure through the legacy of Reliance Industries. Until next time, stay tuned for more tales that shape the business world, and like and share with your friends and family, and subscribe for latest videos.